We're continuing on that exercise problem that we just did. So whatever number you had in the previous two tables is still usable for this table here. Okay, so this first table on cash budgets, we want to get the total amount of cash from sales that we're collecting from customers. And it tells you this company has a policy that they usually collect half amount of the sales by cash this month. They're collecting 30% of the sale the next month, 18% 2 months later. Now they have additional information on 2% never collected, which means it's uncollectibles estimation. Okay, so in financial accounting, remember some of the accounts that perhaps you may not be able to collect after all at the end. So we may estimate a portion as uncollectible accounts. But this problem here, you can just disregard that. Basically, you just need to use the percentages for the first three. 50% of the sales, so you need to refer to sales budget. Sales revenue for January, 50% of it you're collecting this month, 30% defers to next month. Basically, what I crossed out credits because it's 30% of the entire sales revenue. So it's not just a credit portion, right? So basically, whatever sales revenue you got in the sales table, use that amount in full to times 30%. Let's do. Right, so this budgeted cash collections requires you to estimate the level of cash collections on sales for each and every month. And a portion of it comes from this month's sales, a portion of it comes from previous month, and then another portion comes from 2 months ago. Okay, so first of all, you need to know how much is the sales revenue for each and every month. So you have January, February from previous two tables, previous sales budget table. You have November sales given to you here, which is useful for January's 2 months ago's 18% of sales that you're collecting in this month. You also have December's $425,000. Okay, so to get January's cash sales, you would need to calculate 15% of current months, which is how much? $765,000, and then you get 30% of December's, which is $127,500. Then you have 18% of November's. Okay, so 18% of November's will be $72,000 for January. For February, same logic. You'll be collecting half of what is sold out this month, then 30% of what is sold out in January, 18% of what is sold out in December. Okay, so for these 2 months, you'll be using, again, 50% of whatever is sold out in this month, 30% of what is sold out in previous month, 18% of the sales revenue for 2 months ago. Then you add them up, that becomes the total cash collection you're making for January and also for February. Okay, so this is the first part of cash budget, the cash inflow, cash that we're collecting. The following table, let's do an exercise on payments of inventory purchases.